Welcome back to Indianomics. I have been discussing the first quarter GDP numbers, the outstanding GDP numbers with economists Radhika Rao of DBS Bank, Sakshi Gupta of HDFC Bank, Kanika Pasita of Union Bank and Aditi Nair of ICRA. Ladies, thank you very much for waiting on. Let me start with, what the Reserve Bank will do. Sakshi, that question to you. Do you think now the hopes of a rate cut or even need for a rate cut goes away? After all, the economy is doing well.
I think even before this number, the possibility of further rate cuts from the RBI, given the last meeting, I think were very low, right? I think that, people were talking about perhaps another 25 basis points if there are, very big downside surprises to growth. So, that is one thing. The second thing is, I think that from a monetary policy perspective, I think what is now more important is what happens to activity from here on. Right? Because Q1 is something that has already happened. Yeah. I think that that's backward looking, but monetary policy needs to be forward looking. And if we are going into this year with 50% tariffs, I think one can argue that if the impact of that and the second round impact of that is high, from an investment perspective or from a labor market perspective, there is still space for the central bank to kind of look at rate cuts. But I think that's a question that we only able to answer, by the end of next month once we have better understanding of what's happening to MSMEs or exporters.
Fair point. Since all of you are talking about the second half likely to be, impacted, let me first get your idea of how you'll see your full year numbers changing after this first quarter number, and then we will come to the other internals of the GDP. Let me start with you, Sakshi. What will your final number be? You remain at 6.3?
Yes, so we are at 6.3. Before this number, we saw a downside risk to our number of about 30 to 40 basis points. But now with this number, I think for now, I'm keeping it unchanged.
Okay. Aditi, your old number and what may be your new number? Full year GDP?
So, Lata, I was at 6%, and I'm going to argue that I'm going to stay at 6%, and I'll tell you why. A lot of the early numbers for July aren't looking that great. So Q1 is done and dusted. Exactly what Sakshi said. Let's not look behind to the momentum from Q1. Government capex from Government of India has contracted in July. That's the number we just got about half an hour, 45 minutes back. With the heavy rainfall, mining and electricity are not likely to give us any support in Q2 either. And with the very heavy rains we've seen recently, in fact, agricultural output, this is a little bit of a negative. I am surprised that the Q1 number is so low for agriculture, but the last few weeks of the monsoon turnout are not that positive for agriculture in the immediate term either, although heavy rainfall and healthy reservoir levels obviously are very good for H2 for the Rabi crop. So I think, it's my 6% forecast for the full year still requires the economy to grow by 5.5% in the last 3 quarters. And in a scenario of 50% tariffs, that's still a tall ask. So I am not increasing my forecast up from 6%. I'm keeping it over there.
Yeah, but it's important that in spite of the tariffs, it's not going below 6%, which was a fear. Kanika, old and new number. A little quickly, because I have to cover other questions. What are your forecasts?
So, Lata, acknowledging 6.3%, that's what I forecast. If I keep all other numbers for the quarters unchanged, you actually move up to 6.5, 6.6. I'll still keep it unchanged because of the tariff uncertainty.
Okay. So 6.3 is your number. I'm sorry, I'm rushing you. Your new number is, your remains at 6.3.
Yes, thanks.
Right. Radhika, what were you expecting and what are you likely to change it to?
I think my number was at 6.3%. I would have an upward bias to that number. I think because otherwise we need the second half of the year to, optically and technically to be much, much weaker, though there is going to be impact from tariffs and, the other cyclical factors as well. I would lend a bit of an upside surprise to my forecast.
Okay, absolutely. Because, if the current quarter has a base of only 5.6%, so I would expect that this quarter also will show a decent number also if exports are front-loaded to the United States. then, I don't know if the remaining 2 quarters should be as bad as 5%, that we should get an average so low. Let's see what the Reserve Bank says on September 30th. Now let me come to the tax part. Aditi Nair, you were the one who pointed out to me that although the February budget said that the nominal GDP has to grow by 10.1%, because we saw a bump up in last year's nominal GDP, now the asking rate is only 8%. Nominal GDP, and we have delivered 8.8 in the first quarter. So do you think now taxes and other numbers, fiscal deficit issue should not be a problem?
So Lata, I'll just kind of give you my little fiscal summary based on the July numbers that we've seen today. I'm still not worried on the nominal GDP side. Like what I had said earlier, because the FY25 base got bumped up.
It may over-deliver is my point.
Yeah.
It may do better than what we thought.
Right. So otherwise, we think that the government has leeway of about 50,000 crore to either, absorb lower taxes from GST or from direct taxes, or to provide higher capex, or to provide some sort of package for exporters. So 50,000 crore is the total leeway that we see in the budget as compared to the budget estimates to take care of any of these 4 eventualities. I would rather see some sort of fiscal package for exporters than a rate cut. Given the overall growth inflation forward-looking numbers that we think will turn out to be the case.
Okay. Radhika, would you say that now even a consumption boost is not even needed? That when the GST Council meets, they can actually trim down the kind of consumption boost they need to give. The economy is not at all in a bad shape.
Certainly, I think, but we should also remember that one of the points we spoke about was the kind of gap between what high-frequency numbers look like and what the headline GDP seems to suggest. And I think no one other than states will feel that on the ground. We should remember states are facing 2 other factors. One is this GST rationalization, which I think they will probably have a bigger say when their council meets. And the other one is the tariffs. Now, tariffs, what kind of support to give businesses? While the center government will provide some support, I think states will have to lend their hand, because end of the day, they are the ones who are dealing with the manufacturing firms. We spoke about Tirupur briefly, so that is another one of the examples of textile manufacturers. So they are the ones who also on the ground who need to be providing support.
Yeah.
They have the bandwidth to provide that support. At this point, not many states have that, especially the ones that collect a lot more GST.
Yeah.
So I think while it makes it easier going into the GST Council, but I think there will be a big pushback in terms of timeline for this, because again there are multiple other headwinds that the states are facing as well. But at the headline level, of course, the growth, like we already discussed, it looks very, very, very strong.
Yeah, pointing. Actually, we are out of time, but that's a great point to end this conversation. That the fiscal push is needed for exporters, especially in affected areas like Tirupur or the gems and jewelry area of Surat. Radhika Rao, Sakshi Gupta, Kanika Pasricha and Aditi Nair, thank you very much for joining me in this conversation. The takeaway from this is that the nominal GDP at 8.8 is also much higher than what the asking rate is, and therefore we may have a larger nominal GDP at the end of the year, in which case the government may be able to manage a higher fiscal deficit number. It was supposed to be 15.9 lakh crore. They can probably go up to 17 lakh crore and still remain at 4.4% of the GDP. That may give them some elbow room actually to design a fiscal package for the exports, export sector that is faced with the tariffs from the United States. All told, it's an excellent number. The one thing that it takes home is that it reduces chances of a rate cut from the Reserve Bank on September 30th, and it also reduces some kind of pessimism about the economy. It seems to be doing well, but we don't know whether to believe the lead indicators that we see or this GDP number, but this is for the moment an excellent GDP number. On that note, we wrap up on this edition of Indianomics. More news and updates are lined up for you.